Hello and welcome to our today's Coffee on Consulting. Today we have the topic Global Talent, Local Taxes, Withholding Tax Essentials for Foreign Employees. I'm sure that is a topic which all of you have at least once a day you will have to discuss it or think about it, what you need to do or what the next steps will be. We will go through the different steps and the different topics and angles to look at in the next 30 minutes. My name is Friederike Roeg, and I have the honor today to be your host and to go and discuss the topic with you. Before we start, I have two administrative things. One is the housekeeping rule is everybody is unmuted, so you can't just discuss or let us know your questions. Please use for that the box on the right hand side where you can put down or write down all your questions you have in that regard. Please use it for anything or any question you have, because then we can also answer that afterwards. Any question you have and write down during the next 30 minutes, we will discuss directly after the presentation. In case you don't find the time to write that down during the next 30 minutes, no problem at all. Please just drop us an email afterwards and we are happy to answer it thereon. Then also, I think we should start. Withholding tax essentials for foreign employees. As a general rule, we look today only at where the employment income will be taxable. And we will in the end focus on the example from Switzerland and I would like to demonstrate and show you how it works in Switzerland, and then you can have an idea maybe how it also might work or can work in any other country. However, it's very crucial that you really check in each country where the situation arises, how the tax principle is, what the domestic national law is, because that is always different, and you can't just copy paste it to other countries. However, it will be giving you a good idea, and we will discuss the main principles in that area. Employment income, as a general rule, is always taxed where the work is performed. There are then a couple of exceptions to it, but as a general rule, that you can take away basically for almost all kind of countries and situations. There are a bit of different rules for example, cross-border employees, for board of directors, for singers, and there are a couple of more of that. But as a general rule, this is the basis. And today we would like to limit ourselves in order to not get too confused, as well as to also see what the main area is we are today looking at is really about normal employmentship, meaning an employee is employed at company A as a, in brackets, normal employee. And in principle, then, the taxation is, as said, in the country the work is performed, where the work is performed. So if I am living, for example, in Switzerland and will be working in Germany, then usually Germany would have the right to tax me. Now, because of if someone only would work maybe in a country for 1 or 2 days, it doesn't make any sense that then also the taxation will already start to kick in. So there we would look at the exceptional rule of 183 days rule. But that is mainly for assignments meant. If we, and today we rather look at local employments, there it will be a bit difficult, because usually also if I will work for a German employer, even if I only work for 7 days on a local employment there, then Germany definitely has the right to tax it, and there is no question around it. Because we have to look at the 183 days rule then in with all the three different, or better to say almost four conditions there are. And one of the condition is that if the employment income, if the salary is being paid out from the legal entity in the country the work is performed, then the 183 days rule doesn't play any role anymore. So the taxation will be in the country the work is performed. If the salary is paid out now, for example, in Germany, but I'm not working in Germany at all. It's just there is my employer, and I work 100% in Switzerland for a German employer. So salary I will get out of Germany. I'm working in Switzerland. Now, it doesn't matter really whether there is the salary payout in Germany. Germany will not have the right to tax me. The taxation right would be in Switzerland for my employment income. Now, in case I would work the one or the other day in Germany, however, then Germany would have the right to tax those days in Germany. In that topic, withholding tax essentials, one of the essential is that we have to look at the type of taxation, or how am I going to be taxed in the country. If I take the sample where I'm employed in Germany but living in Switzerland, working in Switzerland, so keeping or saying that I would be married, have 2 children, really my residence is basically in Switzerland, then it's quite easy. Switzerland would be my main residence, and based on that, my main tax residence. Main tax residence means also that my unlimited tax liability would be in Switzerland. And this triggers that the worldwide income and the worldwide assets will be taxed in Switzerland. Whereas Germany, where my employer is, and in case I have maybe the one or the other day working in Germany, then Germany has the right to tax those few days I'm working in Germany, and that we would call limited taxation. Withholding tax, we today only discuss based on employment income. There is also a withholding tax you may know for dividend and interest income. We don't discuss that part today. We really limit there as well on the employment income. Also in that regard, we have to look at possible double tax treaty, and maybe there some indications where the taxation might be limited in one or the other country. As said, we will now go through the different withholding tax rules, or different things and matters you have to look at and keep in mind based on the example of Switzerland. And then the first question we need to ask ourselves is, who actually pays the withholding tax, or the tax at source? So you will see in Switzerland both terms either withholding tax or tax at source for the type of taxation which will be directly deducted from the salary or compensation by the employer. In principle, the employer deducts it and then pays it directly to the tax authority. The general rule is, in Switzerland, we only know the withholding tax or tax at source deduction for foreign employees who reside in Switzerland and who have either just a B, an L permit, a 120 days permit, or under the notification process. So any foreigner, with the exception of those who have a permit C, or any foreigner who has a spouse who is either Swiss or the spouse holds a residence permit C. In those cases, there is no withholding tax. Otherwise, you would have to apply the withholding tax on the employment income. And that is the second scenario as well, or the second point. Also, withholding tax will be applied for any other person, any other individual resident abroad. And there, it doesn't matter whether that is a Swiss national or a permit who maybe had a C permit before, that person would also be subject to withholding tax. So you need to differ between people who have the residency in Switzerland and the ones who don't have a residency in Switzerland. So that is the first point we have to look at. Then the second one is then which tax tariff actually do you have to look at? In Switzerland, you all know we do have 26 different cantons. Therefore, it's quite important to know which tax tariff, because each canton has its own tax tariff as well. Which one do you actually have to look at? And as the tax system varies between canton to canton, it's also the same for the tax tariff. So basically, you have to look at the canton of residence of the employee to determine which tax tariff you have to look at. So if I'm living in canton of Zurich, and even if my employer is now still or if it's not in Germany, but let's say in St. Gallen, then for me, my employer who is situated in St. Gallen has to use the Zurich tax tariff. It's not the canton in which the company is or the legal entity is situated. Now, for example, for a cross-border worker or a board of director of a company, because they don't have a residency in Switzerland, and we just looked at that those are actually subject to taxation as well, for them, the canton is relevant where the employer is situated. So that is the big difference. The withholding tax tariff is a progressive rate, so the higher the salary, the higher the tax bracket. Usually you find in the tariffs up to 20,000, 50,000, and then afterwards you sometimes have to call the authority to see what the percentage is. In some cantons you have also the tax tariff to a bit higher salary, but usually it stops at one point. It is relevant how much you will earn in 1 month, because we said just now the higher the salary, the higher the tax bracket is. So the employer has to look at what you would get in 1 month and add everything together and then use the applicable tax tariff for that applicable salary. So the tax tariff can vary from month by month by month because of the if the salary or the compensation might increase, because maybe in one month you get an additional bonus or an additional 13th monthly salary, and then the tax rate might be higher than in the month before. On that slide, we have indicated all the different tax tariffs there are. It looks like huge and a lot of, but in principle, you basically work more or less with four different tax rates, and usually it is A, B, C, and then maybe the cross-border tariff, which is usually you would look at L or L, M, and N, but it depends a bit on the situation. In simple words, the tariff A is basically for single persons. Tariff B is for married people where only one of the couple is working. And tariff C is if you're married and both are actually working. Then you use the tariff C. You also will see there is one part which says with church and one says without church. And that you will see in each of those tariffs, because also there the tax rate will differ, will change if you have someone who says he is subject to church taxation as well, and someone who hasn't. Basically, what the tax authorities will do is they look at how someone has done the registration. And at the time point of a registration, you will be asked, or anybody will be asked, what the church affiliation is. And if someone says, I'm Protestant or Catholic, then basically the tariff with church needs to be taken. If someone says, I have no church affiliation at all, then the tariff without church can be taken. Otherwise, also, in case someone says, I would like to actually leave the church, then after someone has left the church and has the confirmation from the church, someone can be exempted from it. In case now, as an employer, because it's not any longer that you get a form or letter from the authority indicating what the right tax tariff is, you basically have to depend or make your decision on the information you receive from the employee. And in case the information you receive is you don't feel that is really correct, and you think you're not sure whether that is really true. So if you think the data someone has not shown you is reliable, then you have, for single employees, you have to use A0Y. A stands for tariff A, 0 stands for no children, and Y stands for church tax. And for married employees, you have to use C0Y, which means married tax tariff, where both are working. The tax tariff is then a bit higher than the tariff B for married people with only one income, and 0 children, including church tax. Reliable data can be, for example, for married people, in case someone gives the indication that he has his wife or her husband is not working, but you are not quite sure, and there is no formal statement or nothing you can see that that is really the case, then you rather use C0Y. For any person who is earning salary below 120,000 Swiss francs in a year, it is quite important that you use really the correct tax tariff, because basically the deducted tax is also the final tax liability. For any person earning beyond 120,000 Swiss francs, they will have to file a tax return in any case, and therefore the deduction or the application of the tax tariff is not as important as for the first category for anybody below the 120,000. Now, the 120,000 is also something which is not for each canton the right figure and determining whether someone has to file a tax return on top of it. In some cantons, you actually have even higher rates, like Geneva. There, it's after 500,000 you can only file a tax return, and there are a couple of other cantons who have different rules. So that is something which you have then also to look on a cantonal basis to see when it really matters, and when there might be, in case it's not done done completely correctly, it's not that big of an issue because the individual has in any case to file a tax return, and then based on filing the tax return, a recalculation will be done. And that also brings us to the next topic, because one part is you first have the tax at source or withholding tax deduction, and then it depends a bit on whether you can also file a tax return on top. Because as I said, the tax at source or withholding tax tariff is just a cantonal tax tariff. So it doesn't matter where you live in a canton. That is basically, there's one tariff independent of the commune you're in. And as you know that it's not only the cantonal part which is varying canton by canton, it's also the commune, which you can have a lower tax rate commune and a higher tax rate commune. In Canton Zurich, for example, the tax at source tariff basically uses an average of all the communes in the canton. So if you're living in the commune of Küsnacht, which is really on the lower end, the cantonal withholding tax rate is a bit higher than what you would have to pay if you are living in the commune of Küsnacht. Whereas if you're living in the city of Zurich, which has a bit of a higher tax rate, then actually the cantonal withholding tax tariff would be actually better than the usual taxation. Therefore, the tax at source deduction is basically really sometimes the first level, and then in a second step, when you have to file a tax return, the paid withholding tax will be just credited against the final taxation. There are reasons, even if you are below those 120,000 Swiss francs as gross employment income, when you still can file a tax return or what we call a correction of the withholding tax procedure. That is either if you object to pay the withholding tax at all or a part of the withholding tax, if you say there are errors in regard of the tax rate or the taxable income. Also for all those people who maybe have worked for a couple of days abroad and the other country has the right to tax it, and Switzerland cannot tax those days. Could be also the situation, or maybe there is the use tax tariff is not correct. The deadlines for that, and that is quite important, is the 31st of March of the following year. So in case you have one of those reasons and you definitely would like to do something, then definitely you need to file it before the 31st of March. That deadline can't be extended, so that's a final deadline. It's also in case you have international commuters who maybe have their residence abroad and are working here in Switzerland, employed in Switzerland. So as an employer, you will deduct the withholding tax on their employment income. However, because they are living in another country, the other country might have the right to tax certain days. So for those, they can also make that change if it hasn't done every month, done already in the normal payroll procedure, then you can file a different or a tax correction for that and to get maybe a refund. Also, in case you have certain deductions that can be done, but there are certain limitations to it. The withholding tax calculation needs to be done from the day one. So if someone is subject to withholding tax in Switzerland, then definitely it is then starting from day one. For determining what the taxable income is for the month, you would have to look really at the total employment compensation in 1 month, and then you look up in the tax tables of the correct tax tariff which one is the right one to use. You also have to think about any possible cross-ups. For example, for taxable elements like net compensation, in case you have told the or you have agreed with the employee that you take over, for example, the school cost for the school for the children, but he could have easily gone also or put his children to a local school, but you needed the employee and agreed on paying the school cost. So those would be an element where you have to cross up. Reimbursement of social security contributions, taxes, that is also something. If as an employer I pay those contributions on behalf of the employee, then that is something which needs to be crossed up. And also I have to look at possible deductions in order to define the right taxable income. And then it really goes, as soon as I have that number, I can look up the right tax rate. So again, to define the right tax tariff, I have to look at the canton of residence, or it's the canton of the employer if there is no residence. And then using the right tax tariff, A, B, C, or whatever, in order to make the right calculation. But then it looks like very, very easy, but there are lots of questions then, practical questions, like also in case someone is not the full month working in Switzerland, what would you do? Basically, then again, you would do a kind of cross up because the withholding tax tariff is a monthly withholding tax tariff, and there you have then always to cross up the prorated amount you would pay to the employee to get the monthly income. And there are lots of different other situations where it's not that easy in the end to determine what is the right tax rate and how to do the calculation correctly. For expats coming to Switzerland, and maybe sometimes they also are on a local employment contract, but still being expats, the tax equalization also kicks in with the fact that you might have to cross up the taxable or the income tax from one or the other country. And that is also something which is not that easily done in the withholding tax calculation. So that is also something you have to look at. And as a last point, just before we coming to the end from today, if you transfer someone to Switzerland, and here we have the example, the transfer of the employee from Germany to Switzerland for a project of 12 months, he receives the monthly salary of 15,000 Swiss francs. Social security contributions will be still paid in Germany. And in Germany, as an employer, I pay also contributions to health and nursing insurance. Now, that is something which is in Switzerland a taxable item, and therefore I do need to have to cross it up. And you will see here in the example that if we would just take, based on the 15,000 Swiss francs with the correct tax rate, the tax with the right tax tariff, the tax rate, then we would end up with 16.01%. However, with then crossing up the employer contributions to health insurance and nursing insurance, we come to a bit of a higher new gross salary, and based on that also a new tax rate which is applicable, those 16.72%. And there you see it makes a difference. And therefore, it's quite important to be very precise when you do the calculation of the monthly income. And you have really to look at anything and everything someone receives in that specific month in order to make the correct calculation. This was now on a very, very high level basis, a couple of essentials in regard to withholding tax for foreign employees. I hope you enjoyed it, and I see that there are no questions at the moment. Therefore, I will close the today coffee and consulting event. In case I said the offer is there, in case you do have any questions, then just reach out to us and we're happy to answer that. I just would like to take one more minute from your time to invite you to our Swiss Global Mobility Conference, which will take part in next year on the 27th and 28th of March. So if you're interested in, then just check it out on our website and you will find all the information there. If not, just reach out to us. Our weekly alert, in case you not received it or are not receiving it, just reach out to us and we're happy to send you that as well, because it might help you with one or the other question you might have. The next webinar we will have, and there we will dive in a bit more into the withholding tax calculation, which is on the 4th of September. However, it's held in German. And then the next one is on the 2nd of October, our seminar, half-day seminar, still online, in regard to labor market control and work permits in Switzerland. I thank you very much for the attention today and hope you have a wonderful week, and hope also to see you soon at one of our next events. Thank you very much.